Here's a quick rundown of the SPX price action for Tuesday, April 15th, 2025, and targets using anchored volume weighted average price. The SPX closed at 5396.63, which was down 0.17% from the prior day. The SPX is sitting 6.2% below this 200-day moving average. The 10/27/2023 anchored VWAP is sitting at 54.19. We first breached this on April the 3rd. Been trading pretty much below that ever since, and we're currently sitting about 0.41% below this level. When we look at the Fibonacci retracement, we can see that that's sitting at about 38.2% retracement from the low that we set on April the 8th. The MACD is still sitting in negative territory, but the 12-day moving average has crossed above the 26-day moving average. That would indicate a buy signal, at least on a week basis. And the RSI is sitting at 45.49. We still haven't crossed above the 50 line to confirm this buy signal, but we're getting pretty close. Trading volume was down a little bit from the 50-day moving average, sitting at about 21.62% below that average. If we take a look at the VIX, we can see that it's decreased slightly from the previous day and has almost halved what the peak was on April the 7th. I'm going to add a couple of lines here because I want to show a little bit of an analysis based on a post on X that I saw from Lance Roberts this morning, and I just wanted to confirm that. So I'm going to set a couple of lines just so we can see them here, and we can take a look at that analysis and see if it's holding, and maybe we have a new pattern that's forming. So I'm going to set a red line here so we can see it. That's at the peak of 60, and we're going to compare that to a couple of previous cycles. And I'm going to set another horizontal line at 31, and I'll set that to a magenta color so we can see that here. And then I'm going to go to a weekly basis so we can compare this all the way back to 2009, 2008, 2009, which was the great financial crisis. So we can see that we have peaked to at least 60 on basically 4 different occasions. One was in the great financial crisis, in the pandemic, and then on August the 5th during the yen carry trade, and then most recently in 2025, just a couple of weeks ago. But if we look at this, and we look at this line that I set at 31, I need to add the SPX on here as well. So let me get a price of the SPX. Okay, we'll set that there, and then I'll move it up a little bit so we can just compare. So I'll move the price up here just above the volume. We don't need the volume on there. Okay, so back in 2009, we can see that we peaked above 60. And then by the time that we got back down to a VIX of 31, the market had already bottomed at that point. We can see that here. So never did we go lower at that point. Once the VIX had peaked to 60 and dropped down below 31, we never got a lower price in the SPX. So then if we move over to 2020, we can see that once the VIX peaked up past 60 and then came back down to at least 31, we never got below a lower price in the SPX. So those are two patterns that are confirmed based on four patterns that we actually saw, or four peaks that we actually saw past 60. So that gives me a little bit of hope that maybe we have a pattern developing where we don't see a lower low in the SPX. Next thing I'd like to take a look at real quick is the bullish percent index, because I'm seeing some positive signs here. We got down as low as 11.8 in the bullish percent index for the SPX, which is basically only 11% of the holdings within the SPX were in a bullish configuration. But we have seen that increase quite dramatically to 36.4. Getting up past 50 would be a really good sign, but we're definitely seeing some improvement in this area. Then if we look at the New York Stock Exchange, which is a broad holding of equities, we can see that we haven't even crossed above 30 yet, but definitely an improvement for the 17.88 that we saw earlier. If we look at the NASDAQ 100, we got down as low as 6. We're now sitting at 43. And if we look at the Dow Jones Industrial, we got down as low as 10, and we're now sitting at 36.37. Then one other thing we can take a look at is the CBOE equity put call ratio. It's set with a 5-day simple moving average, and we can see that that is definitely decreasing since the peak here earlier in April. So we are drifting down there as far as the equity put call ratio. If we go and take a quick look at the dashboard, we can see that technology was leading the way yesterday, followed by financials and communication. We can see consumer discretionary materials and consumer staples were at the bottom of the sector list. The Dow closed down 0.38%. S&P 500 was down 0.17%, and the NASDAQ was down 0.05, and we've already taken a look at the VIX, but we can see that it was down 2.49% yesterday. Then if we move over to the futures, looks like we're in the red today, especially in the technology area, following some news about NVIDIA having to do a $5.5 billion write-down related to licensing of the H20 GPUs for export. They're going to have to write that off. So NVIDIA is getting hit, I think, by about $6 6% this morning. So anyway, that's all I have for today. I'm a little bit encouraged by the research that we confirmed on the VIX that we may have already hit a low for this particular cycle. Hopefully that's the case. I wish you the best in your trading. Have a great day. We'll talk to you later. Thank you.